Yeah.
So, you know what I'm saying? So, yeah.
I feel like people start doing their research on who they're talking to and they think they can change the price.
Facts. Exactly. Facts.
Cool. Let me make sure I got that on mute. This is Millionaire Talk Show. Charles Oaksby, also known as Top Millionaire. Man, we're doing some really cool things. You guys all know the purpose of this podcast is to share the stories of successful African-American business owners and investors. We want people to hear the stories of successful examples because they do exist. And we believe that business and business and investing are the truth. I think I might have said that already. Nevertheless, man, I've seen this brother online. I don't know if he knew I saw him online, but I've seen him doing events at the Black House. I've seen him teaching people about the stock market. And it was real cool because I saw the name pop up on my calendar. And then I went to the page and I was like, I know this dude. I've seen him around. And so it's cool seeing your success at such a young age. It's cool seeing the passion that you have to pour back into the community. So it's one thing to have success. It's another to approach giving back with such, I guess, vigor, as I would say it. Lawrence Eggleston, man, welcome to the show, brother.
Yes, sir. I appreciate you. Thank you for having me.
Can you tell us a little bit about who you are?
Yes, sir. So my name is Lawrence Eggleston. I'm originally from New York. So I moved here to Atlanta pretty much in 2011. I was 11 years old. Spent pretty much half my life in New York and half my life here in Atlanta. One of the biggest things that I'm passionate about is really, just teaching people the importance of understanding economics and understanding markets, understanding why it's not always good to trade your time for money, but how you can trade your money to make more money and how you should be investing your money. So, growing up for me, I always, I was pretty fortunate growing up for the first part of my life. And then the second part of my life was where, things kind of took a turn. I had my parents split up and divorced. So our households kind of separated. So a lot of responsibility fell on my mom. And one of the things that I always told myself was like that I wanted to make sure that I had multiple streams of income just in case, you couldn't go out there and get a job. You know what I'm saying? You still have money coming in. So in my senior year in high school, I started studying economics. I took economics class just like most high school students in 12th grade take regular economics. And my teacher, he challenged me really to take a look at the world economics. The one common theme that I've seen across the world, that the wealthiest people were people who invested in the financial markets and in real estate. And so I decided to go the financial markets route. I studied economies first. I studied, European economies, studied the Chinese economy, studied the Australian economy, studied the United States of America economy, and pretty much seen that, all central banks pretty much move together. Pretty much most markets move in unison. And I started, just understanding different reports. Understanding non-farmer payrolls, ADP employment, CPI, PPI, all these different reports that come out on a month-to-month basis. Then I took it a step further. Once I mastered the economics and understood what was going on, I started to invest long-term. My first two investments were the VTI and VOO, the Vanguard funds. After that, built up my long-term investments, opened my brokerage account the day I turned 18. I was a freshman in college and went to college a little bit early at 17. And I went ahead and continued to invest, had those recurring investments. Then after 2 years, I then got into options. I started trading, started doing a little bit more short-term and mid-term type moves. I took the profits that I made from trading and then just continued to invest in long-term and just been consistent. I'm very passionate about people understanding that in order to get to where you want to go, you have to live a low cost of living. I'm not like most 22-year-olds that want to be flashy, want to put on for women, want to put on for the crowd, all of that. I'm about really showing people, hey, time in the markets beats a lot of times timing the market. And also making sure that you kind of are consistent in your reoccurring investments, making sure that you're living a low cost of living so you have money to invest. And also that you're just taking it one day at a time and you only live once. You want to enjoy the finer things in life, but you want to do it at a pace. You don't want to over leverage yourself. So yeah, now I've been trading full time pretty much since 2018. And, I went and I was a professor at my college university that I went to here in Atlanta. Wow. So my college was paying me $10,000 a semester just to teach financial education classes. While still going to school, pursuing a degree. I ended up leaving my college once, like I said, pretty much everything took off for me. I will go back and complete at one point, but that's just a little bit about me. I have 2 kids, have my son, I have my daughter, and those are people that I do it for. And so, yeah, that's it for me.
So you mentioned the central banks. Why is it important to understand those? Because I think most people skip over that.
Yeah. Because the control of money supply really dictates the cost of business. So when you talk about investing in, these businesses, especially over the past 6 to 8 months, people have probably seen a lot of these growth companies drop. And that's because people were anticipating, the Federal Reserve raising interest rates. So a lot has to do with, the operating margins, the profit margins, when it comes to the cost of money, the cost to borrow, the cost to have money, the rate and change of liquidity throughout not just the regular stock markets, but also the bond markets. Also, when you start to think about how big is the Federal Reserve's balance sheet, a lot of times determine, overall, is inflation running hot? How much money supply is out there? And if you take a look at the United States right now, about 30 to 35% of the money supply that's been printed over the past 2 years, that's really caused inflation. So everything is supply and demand, including money. So that's why the central banks is so important.
So when you said the cost of money, a lot of people think that, okay, the company is just going to raise the price to fight off that.
Yeah.
What's your response to that?
So if you raise the price to fight off that, what happens is that you basically face a point of maybe deflation. So that's where if employment levels are not increasing, wages are not increasing, but costs are increasing due to inflation, or companies just flat out raising prices, what happens is then people can no longer afford those things. And then if people can no longer afford those things, then those earnings start to take a dent. Then investors start to sell and get out the way and find a better profitable company. So that's kind of some of the things that can happen. In deflation, was the fear in 2020. That's why the Federal Reserve cut interest rates to zero, because they did not want to see, deflation happening. So, yeah.
Yeah. So we got the Fed increasing rates. How does that impact the stock market?
Yeah. So when you got the Fed increasing rates right now, one of the main things that you'll see is it'll put pressure on the loss-making businesses first. So the companies with high debt, those are going to be the companies that go underwater. These companies like the Lyfts, the Ubers, the DraftKings, all your SPACs, right? I mean, I couldn't turn on the TV a year ago without hearing the word SPAC.
Right.
I haven't heard SPAC in forever. So all these companies that, came to the market very fast, they'll be put under pressure. A lot of most IPOs, I mean, I probably say 90% of IPOs since 2018 have been garbage for the most part. And a lot of them are starting to get exposed because of their financial risk. So that's what happens when the Fed raises interest rates. We saw our first 50 basis point increase since 2000. So this is the first time. I was 1 year old at the time when the last time the Fed increased it at 0.5 point. You also saw the Bank of England raise theirs to 1% here early this morning. So what I would say is that, it puts pressure on those loss-making businesses. It pretty much puts pressure as far as just tightening up that liquidity. In my opinion, I think people should be focused a little bit more on the risk-off type assets. So those hot NASDAQ stocks that say, hey, we can do this, we can do that, but didn't really have a profit, those would be the first ones to go. The value names, the names that, had a strong balance sheets, the names that are not in high debt, the names that have produced and consistently produced earnings, those would be the names that will be all right. Now, in the first blow, how do I call it? The first punch, usually when the Fed is raising interest rates, you'll see the market drop. But I just tell people to turn back the clock and look back at 2018. The initial reaction of interest rates being raised caused the market to drop, but it does set up a great buying opportunity as a long-term investor if you're ignoring the noise. So that's what I would say. Fed raising interest rates opens up an opportunity as a long-term investor to get some quality businesses that stock prices might be falling, but their earnings and their revenue more than likely may be increasing. So that's my take.
Yeah. So that was my thought too. It's like, yeah, you might have been sitting at some companies that are trading at highs pre Fed raising the interest rates. And you might take a little bit of a dip in the meantime, but if you hold on long term, it'll all play out for you.
Yep.
So you said loss-making companies. That's not a term that I've heard used before. What do you mean by that?
Yeah, so loss-making businesses, so like companies that don't have a positive net income, companies that don't have any take-home at the end of the day. That's exactly what I mean by loss-making businesses. So a lot of these businesses, yeah, they can pay their employees. Yeah, they can pay the CEO. They can pay all these people. They can pay the bills. But at the end of the day, the company is inheriting a loss at the end of the business day. The company is not taking home anything. So it puts pressure a lot of times, on those companies. And so names like Uber and names like Lyft have had billions of dollars in loss of net income. So that's exactly what I mean by that. Yep.
And so a lot of people will say, well, how does a company that's making a loss actually have a stock price or have like a valuation? How do you answer that question?
Yeah, so a company that's making a loss, and this is why a lot of these companies love to come to the market, the public markets, because they can go ahead and grab some of this liquidity off the table. I call it they rob shareholders, because what they're doing essentially is they're taking the money and then they're going and paying down the debt, and they're going and trying to get them out of that debt, or they're going and taking the money and doing projects. So a lot of times you'll get that estimate. What a lot of times people look at is like forward PEs. So a forward PE, to explain to people, is, forward price to earnings. So what does price to earnings pretty much mean? A lot of these companies actually don't have a PE ratio because they have a price, but they don't have a earnings. So there's no way for them to have a PE. So what they use is a forward PE to say, hey, by, it's 2022. We'll say by, hey, 2026, this is what our earnings are projected to be. So this is our forward in the future type price to earnings ratio. And so a lot of times these companies draw massive valuations based upon forward, what they think is going to be the valuation of the company, or what they think the company will be making earnings wise. And that's why a lot of these companies got clapped, because they were saying, hey, we'll be earning this, this, and that. And so what happened was, you seen a big amount of people come in and invest, put their money in, a lot of big time, people coming in, making these valuations. For example, like a Rivian. I could just use this one. This was a company that came in with $100 billion market cap day one. It shot up to hitting $150 billion market cap, and had about like 16, 18 cars, all because Amazon invested money into them. So when people scale back and said, okay, outside of Amazon investing money into you, what do you really have here? And people started to peel back and say, there's nothing really here. And so that's what a lot of times, you'll get these valuations that get bidded up because people think, hey, this company will earn X amount and it's worth this. But when people realize and peel back and see over time that it's not, they're quick to leave. And so that's why those are always the first businesses that get sold off the most.
That's why you see those newbies getting in there, buying the stuff that they see flying high, because when they are getting those valuations, the stock went from where it was to where it is now. And they're like, oh, this is a great company. It's going to be the future. We need to be buying this. We saw that happen a lot with EVs. And I think a lot of it is because they were thinking it's going to be the next Tesla. And they're seeing what Tesla's been doing for shareholders. And so, yeah.
Yep.
In terms of,
a lot of people are just looking at it like, yo, I can hop into this and I can make this quick money because they see it flying, not understanding the dynamics of maybe the shares outstanding, how much supply of shares do they have, all those different things. So yeah, I definitely agree.
So what's your take on that? Because I would consider myself more of a fundamental investor. Mm-hmm. And I see a lot of people who they throw these ideas out there. Oh, this company, that company, but the numbers just don't support the valuation. And so they're hyping it up. And I'm just looking at that's not a good company to invest in. Do you think there's opportunity to buy those companies, or do you still kind of steer away from those?
I feel like, in my opinion, I feel like it's obviously there's risk with any investment, but I feel like people should be putting minimal amount of money. I'm not saying that people shouldn't give it a chance. Right. You get what I'm saying? But when I'm seeing people have 40% of their money in Lucid and 20% of their money in Neo, but don't have any money in Apple, it begs me to take a look at this question. What are you thinking? What are you doing? So that's really where, you might have maybe 1 to 2% of your money allocated in a name like Lucid because, you believe in it. You believe that, hey, maybe this company could turn profit. But guess what? If anything goes to hell, you know what I'm saying, you're not left really holding a major bag. So I think this all about, I think as far as new investor, I think as far as just understanding portfolio allocation. There was a lot of people that were online pushing these stocks, EVs, the future, fintech's the future. This is the future, the future, the future, the future. And everybody was just kind of hype beast investing. Yep. And that was what it was. Hype beast invest. 2020 and 2021 was hype beast invest mode. And everybody was investing based upon what this person looked credible online saying, oh, this is the future. This is the future. Metaverse was the future in fall of last year. All the metaverse stocks clapped, right? All of them. Every last one of them is clapped. Doesn't mean that the metaverse is dead. Doesn't mean that it still can't prosper. But once again, you never want to be in stuff when it's the cavalry. Just like cannabis stocks are supposed to be the future, the future, the future. And that's kind of where I say is, people got to pay attention and can't just invest based upon, well, I'm listening to this person said this, so guess what, it's going to do this. Nah, you got to be willing to have proper risk management and proper allocation and understand that you shouldn't be putting all your chips in on anything. So that's my take.
Yeah, man, that's a good answer. That's a great answer. So usually I would ask somebody where they can get started, but I don't want to ask that question. I want to ask for somebody who's already started, somebody who's had some success. How can they take their success to now I don't work a job levels?
Yeah, so I feel like one thing that I would say is I always say live in a low cost of living. I think that's what first major hack, because at the end of the day, a lot of times people are still working jobs because they got things to a lot of things to, liabilities to pay for. So I would say a low cost of living, in my opinion, would be the first thing. I would say really having a big cash reserve, but then also have money working for you. And also, if you, whatever hobby that you might have, whatever business that you have, see, you know what I'm saying, is it making more than what you're making at your job? Like, is it exceeding that? And I also would say different particular strategies that you might have in investing, whether it might be on a stock market. For me, I sell covered calls, so I get passive income off the shares that I own. For someone else, it might be, hey, I might have multiple real estate doors that can cover, 3 times my monthly expenses. So I feel like it's different for each and every person because we all come from different, backgrounds and different financial situations. But I think the recipe, as far as number one, is the same: low cost of living across the board. You don't, so that's what I would say. That's where to start.
True. Because you take a lot of pressure off yourself when you have a low cost of living.
Yeah.
You got a high cost of living, you're on edge.
You're on edge. You get what I'm saying? So it's like when okay, I only have X amount of Z to pay for, you know what I'm saying? But think about it, for like, if you can, in my opinion, if you're making like your years, worth type of, expenses in a month, that's a good point. But don't start making that big time money. Don't start making more money, but then increasing your lifestyle. So like for me, when I first started, really getting money at like 19 and I hit my first 6 figures, people was like, oh man, go get a Tesla, go get a Tesla. I'm like, no, my money's far better in Tesla than me getting a Tesla. Please don't get it twisted. And people's like, man, why ain't you get it? Oh, you this and that, you and all this, and like, yeah. And now my money's far better off being in that stock than actually having driving the Tesla car. When I get a Tesla car, it'll probably be after the models are a lot better and down the line. You feel me? It's I'm in no rush. You feel me? I feel like for me, like, I'm not really a materialistic dude. I care more, in my opinion, about spending time with loved ones, because time is very limited. You feel me? And time is the most valuable asset. So, that's kind of where I come from. I lost my grandfather last year in October, and I feel like, man, I should have been spending more time with him. You get what I'm saying? And so, I look at life a lot differently than what I did before, October. But that's just the way I look at it. Like, living a low cost of living. You don't have to impress nobody. I feel like the best way for people to be successful is when they don't feel like I got to go out there and impress nobody on the road, with whatever, wherever you go, just show up. You know what I'm saying? So yeah, that's the way I look at it.
Yeah. So BWSO, when did you create that platform?
Yeah, so I actually created this platform in my dorm room. So I actually can show you an actual picture right here. Let me show you, make this my background. So boom, here. So I was actually teaching them. I was teaching actually in my dorm room on my monitor, had Thinkorswim up. I was teaching in my dorm room pretty much in 2018. I was just like, yeah, and that's where I said I was at college. I was teaching in a classroom as well too, but I used to have Sunday meetings actually at, in my dorm room, and about, 40 to 50, my peers that went to college with me would pull up, sit in my dorm room, we pack out. It got to the point where I couldn't, I had to, it was packed, you know what I'm saying? And, started getting event spaces and stuff like that. But that's really where I started. It was really a movement because, for me, it's like, Black people were the original people of this earth. So I came up with the name Black Wall Street Originals because we're the first people that, if we want to really be honest, we're the people who started Wall Street. And so, I came up with the name Black Wall Street Originals. And, it's something that stuck with me. I started off, like I said, teaching in my dorm room, teaching my peers, and then it just kind of grew. People was like, man, like, you should do this more and more. And once the pandemic came, a lot of people knew already what I was doing. And, people hit me up because they're like, Lawrence, I lost my job, or, just different things. And it's like, or some people didn't lose their job. Some people was like, hey, I'm working remote now. So now I got time to actually learn what you're teaching. You know what I'm saying? So it wasn't just people just like looking like, hey, let me make quick money to pay bills. But it was like people who seen what I was doing. It was like, man, I just don't have the time. But now, you know what I'm saying, they had a remote job, so they had the time. And yeah, I mean, my company, me teaching people in my academy, Black Wall Street Originals, it's just, it means everything to me. I've taught and, traveled to cities and tough neighborhoods that people don't probably want to go in, talking to people, looking to revive our people. I have pop-up classes pretty much all the time. I know you mentioned about, I have my classes a lot of times at Legacy Center here in Atlanta. Nice, beautiful event space. Do, weekly webinars, teaching my community. Now we're at like 1,500 members, all organically. So, that's just kind of, a little bit about Black Wall Street Originals. So, yep.
Yeah. In terms of trading and teaching people in the community, are you teaching mostly like stocks, or is it options, or is it futures?
So it's stocks, options, crypto, and teaching them buying and selling options, teaching them obviously about investing long-term portfolio, how to really allocate. Because I feel like a lot of times people don't understand, like, hey, I need to allocate this to my portfolio. So a lot of like just strategy based. I'm not the person that just gives tickers. You know, that's what a lot of people come to me as like, Lawrence, give me the tickers, give me the tickers, give me this, give me that. And I'm more the person to show you, hey, this is why I did something. This is how I do it. Find your own niche and your own strategy, and work with what you have, but also be patient. A lot of times people come into my program because they've been in other programs that push them into options trading so quick. You know, I'm the kind of person that say, hey, do the long-term investing, study the economics. You know, I go over pretty much economics every week. That's my big bread and butter that I, really hone in on, just because I want people to understand what's going on and what's happening. It's not all tickers. It's not all trades. It's not all of that and the glitz and glamour. It's about the real hardcore education. And do you understand what's happening in the world outside of just making money? But do you understand what's happening in the world? Do you understand how money works? Do you understand how this economy works? A lot of people always complain about politics and different things, but I don't see no one studying politics. I don't see no one going into politics. I don't see no one going into economics. You know what I'm saying? And so, that's pretty much what I teach.
What source do you go to for information on economics? Is it CNBC, is Wall Street Journal, somewhere deeper than that?
To be honest, I spent a lot of time. So to be honest, my real economic study was really studying the Federal Reserve banks in pretty much all across the world. So I used to go to their websites. I used to go to different videos that they had interviews. I used to listen to their conferences that they had, different places they would speak. I also studied a lot of just financial and economic terms on Investopedia. I call Investopedia the library of investing. Anything you want to find out, it's on there. So I've studied and just like read for hours and hours and hours. So that's a lot. And then also taking a look at past data too. So, I've studied throughout, the early 2000s, 2010s, 1980s, 1990s, just different economic times and crises that we went into. Yeah. And so this is why I can attest to, okay, what happened in the 1980s with high inflation? Why did they raise interest rates to 20%? All these different things. So a lot was, through seeing things that's happening now, but also going back to the past and also understanding the terminology and vocab. A lot of times when I first came into the market, there was words that were being said that I didn't know. But guess what? I didn't get discouraged. I said, okay, I don't know this. I don't know what Jerome Powell said. I don't know what Janet Yellen said. I don't know what these Federal Reserve people said. But let me go research this and understand my terms. So, yeah.
Yeah. Sometimes I kind of consider the Fed like an afterthought, but that's not the case. Some people kind of tune out the Fed. Why is that a mistake?
I feel like some people want to tune out the Fed because they don't understand it. The Fed isn't easy to understand. So I feel like a lot of times people tune out the Fed because they don't understand it and they don't want to take the time to understand it. So it's easy to say, well, they're yip, 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 yip. It doesn't make sense. It doesn't sound cool. It doesn't sound right. So let me just tune it out. So that's why I feel like a lot of times people tune out the Fed. But I feel like it's so important for us because we don't have these conversations as minorities. You know what I'm saying? If I go to other neighborhoods, they know exactly who the Fed is. You know what I'm saying? But if I ask the average Black person, who's the Federal Reserve chairman, they would never be able to answer it. I'll say, I'll give you $1,000 right now. If you could tell me in the next 5 seconds, who's the Federal Reserve chairman, they wouldn't be able to do it. But if I said what Little Baby song came out on Friday, they would answer it verbatim.
Yep. What's your thoughts on Elon Musk acquiring Twitter?
Yeah, so I feel like Elon Musk acquiring Twitter, I feel like it's a power chess move. I feel like Elon is just like the type of person that always showed down big dog. He paid the biggest tax bill in American history. He you know what I'm saying? They kept complaining, taxes. You know what I'm saying? So he paid that. I feel like everything that Elon does is to kind of like just really go ahead and tell them like, yo, I don't care about nothing that you got going on. You know what I'm saying? I'm gonna go ahead and show you who I am and I'm gonna handle my business. So I feel like that's a lot of times what you see from Elon.
Yeah. Man, I know Amazon recently closed some Whole Foods and they got hammered following earnings. Mm-hmm. Are you still bullish on Amazon, or what are your thoughts on that?
I actually think Tesla will actually overtake Amazon in market cap. So I've been preaching that for the past pretty much over the past 6 months. I've been preaching that Amazon that Tesla will overtake Amazon as far as market cap. I think Amazon will go to about $2,000. I think Tesla will overtake them as far as market cap. As far as with Amazon, I think the 20-to-1 split is too much. It puts too much outstanding shares on the market. It's going to move like a snail. So I think they're just positioning themselves to be a value hold name, which they are. Don't get me wrong. Great business, value hold name, but they're going to the Dow, and that's where they're positioned.
They're done growing for the most part.
Yeah.
Aggressively growing, which is interesting because a lot of people ask why I don't like Apple as a company. It's like it does move like a snail, moves a lot slower than most companies. I bought it.
So many splits. When you put, so now it's like for Apple to just even think, for Apple to even go to 300, you're talking about the company has to basically become almost a $5 trillion company.
Yeah.
And you know what I'm saying? That's not an easy feat. You know, it took how long we started to roll back history. How long did it take it to just become a $1 trillion company? You know, it wasn't even until really the pandemic where a lot of this money started circulating. That's where you started to see the stock prices really fly. So, yeah.
Yeah. Facebook, Meta. I know they ran up pretty heavy when all the metaverse stuff was launched, and then it kind of tanked, but it seems like they have some stuff in the work to start growing and start maybe even getting to the point where they could be as large as these larger companies. What's your thoughts on that?
Yeah, so I feel like here's my take with it, to be honest with you. Like, I really feel like with Facebook, it really could have a bounce back. It takes some time, but I feel like the company's position itself. I like what I seen the other day as far as the VR headsets. I think that metaverse play, it will pay off over time. Right. And I think Facebook's position, I mean, even just turn back, what was it, like 6 months ago, where Instagram was down, like it's not going anywhere. You know what I'm saying? There's 3 billion people who use this on an app on a month. You know what I'm saying? So half the world is using this. And so what I would tell people is just like, be patient. I feel like there was some colluding in that drop. I believe some institutions got together and said, we're going to take a hit on Mark and we're going to try to blow this thing up. But I think Mark came back with some fire, and I think he got something up his sleeve. So, you know, I would just be patient with that. Well, I say it's maybe the best investment for people to be in. I won't say that, but I do think that there's potentially a recovery play there.
Yeah. And also, I'm curious, NFTs have been taking a beating lately. What's your thoughts on NFTs?
So a lot of them were just, you know, just pictures of foolish stuff and, you know, really no real world utility. Like I actually have NFTs, and the NFTs that I have entitle people to come to, you know, live events that I have, you know, lifetime membership in the Black Wall Street Original. So every NFT that I have, it has a real world utility. So a lot of people were misplacing the use of saying, oh, this is the hot thing. And so NFTs were hot in the summer of 2021 and early fall of 2021 as well, too. And so you have people online pumping these projects and saying, hey, get into this project. This is going to be the next big thing. This is going to be. And so it's like, you know, a lot of pump and dumping. And so is the concept of NFTs valuable? Is it good? Yes. But with the way they were used, I mean, it's just like .com, where you could put .com behind anything and would pump. The same thing with NFTs. You could just say, hey, I got this NFT and it'll pump, because during that time people were hyped on it. So it was the exact same thing. And you know, I think there's some quality, you know, NFT projects that will be to come, but I just feel like it was just the hype. And that's where I kind of steer people away. Anytime the internet is exploding about something, stay away. Stay away. I could point to every single thing that has failed that the internet blew up. NFTs failed right as of right now. SPACs, garbage, done. Metaverse stocks, done right now, right? So it's like anytime the market is hype on something, I wouldn't even say the market, anytime there's now new people getting in, too many people that don't know nothing about it saying, hey, should I just buy this because I see everybody else doing it? That's usually the time of where we hit irrational exuberance. And if we study back in 1996, that's really where we seen that Fed chair that came out. He called the .com bubble before there even was a .com bubble. He said, I see things getting irrational. People will start having irrational exuberance over the next couple of years. And so people could seriously get hurt and our economy could be in trouble. We ended up seeing that trouble in 2000 and 2001, leading us to, you know, over 2002 to 2003 drop. So, I mean, that's kind of where I saw that NFT spot. And yeah, I mean, just the FOMO, people have fear of missing out. But guess what? People don't want to be invested in the dark times. You know what I'm saying? No one wanted to be invested in Bitcoin in 2018. No one wanted to invest when it's trading sideways. And that's why I tell people, when the markets are down right now, like they are, This is the time you should actually be investing. This is the time where you should actually be putting your pieces and your chips in little by little. I think sometimes people get caught up looking for this imaginary perfect number, and there is no imaginary perfect number. And I think sometimes people are looking for this number where they can just put everything they have at that one number. That's really just not realistic. Could it happen? Yeah, probably once every blue moon. But is it something that you should do all the time? Nah, just scale in over time, be patient, you know what I'm saying? And don't put too much pressure on yourself. I feel like a lot of times people put so much pressure on themselves. Like, man, I got to do this right now. It has to happen like by next week. Instead, they should think, bigger scheme, bigger picture. Like even right now, with the markets being down, people are like, man, the markets are getting hammered. And I'm looking at them like, no, it's not. If you pull up the past 5-10-year returns, market is fine. It's just having a small pullback. This is your opportunity to get in. Why is it that everyone always wants to buy things at all-time highs, but when they get a discount, they don't? If I said, hey, I got a BMW for you for 10,000, people would go find the 10,000. Man, I got to get this. I say, hey, put 10,000 in your brokerage account. I just can't really do that, this and that. It just doesn't make sense for me right now. If someone said, hey, I got half off your Louis Vuitton purse, there would be a crazy line, right? If someone said, hey, I got half off your Jordans, crazy line, half off your iPhone, crazy line. But people don't bring the same principles that they have when it comes to shopping into the stock market. I swear, I need to go find the best shoppers. You go find the best shoppers, they'll probably be beasts on the market because they'll know how to evaluate and say, this product isn't as good. This company isn't as good. I can wait to get this product to this price. This product is down to this price, it's on a discount, let me buy it. So it's the same thing. It's the exact same thing. So that's what I would say.
I like that you said that a lot of people are looking for a number in terms of when to buy. And it's like, when you said that, I'm thinking like the concept is buy low, not buy the bottom. And they're looking for the bottom. They're looking to buy at a point where they won't lose any more money and they'll only make money if they do so decide. And the other thing is that like, you can't really ever find that piece, and it's okay to even lose a little bit on the way in. That's why I tell people, like, if you buy something and it goes down a little bit, like it's like you want to buy at a discount, not necessarily buy at the bottom, but buy at a discount. So as long as it goes back to where it fell from, we're okay.
Yep, exactly. And that's what I kind of been preaching to people is like, you ain't got to catch the perfect. You ain't got to catch the perfect bottom. You know what I'm saying? It's okay to scale in. Don't put that type of pressure on yourself where you feel like, oh, I got to catch this perfect bottom. If I don't catch this perfect bottom, then, you know what I'm saying, I'm going to be mad. So that's kind of what I would say. Like, even right now, I'm looking at the markets here right now. The NASDAQ's down 5%. The Dow's down again. The S&P is down again. And people who might have missed maybe that 405 bottom that saw it yesterday at 430 probably still aren't buying. You know what I'm saying? Oh, at 405, man, it just popped at 430. Is it too late? Now you get another opportunity. And the market always opens up other opportunities. And that's what I try to tell people. So
what do you mean by that? Market always opens up other opportunities.
Like a lot of times people feel like, man, I might have missed something. And then when it comes back down and gives them another opportunity to get into something, they don't take advantage. So that's where I say the market a lot of times always opens you up another opportunity to make a move. So,
yeah. So you recently had a $30,000 day. What was that like, and how did you get into that trade?
Yeah, so what I did was I pretty much was confident in Jerome Powell, paying attention to the last speech that happened in March. So I kind of looked at it like, okay, the market is already down significantly over the past month. And then going into the press conference, the market was a little bit trading sideways. And then I started seeing volume pretty much slow on the sell side. And so I really got into some SPY, QQQ, Tesla, and I got into Facebook calls yesterday, pretty much around 2:36. So it was probably like maybe 2 minutes after he took the podium and he said maybe about 2 lines. And I seen the way that he was going. And I placed a bet on some calls, took the position, was out probably by like 3:15, 3:20 by the latest. I got to check the timestamp, but I pretty much got in those positions and got out. So I just chose my spot. I don't overtrade like that. I don't day trade a bunch, but I do dibble and dabble from time to time. I sell a lot of options, so I sell calls a lot. That's been my core strategy, particularly this year. And so, yeah, that's what I did. So, I got in those, I bought some calls, a couple weeks out, got some in the money options and, got in and got out. All of those stocks pretty much spiked and majority of the money was made pretty much off the SPY and the QQQ. I got in the Qs at 318 and went to think I got out maybe around like 326. And then the SPY, I think I got in around like 417 and got out around like 424, 425. So, and then I had the Tesla calls with Pop. I got in pretty much at 899 and the 901 area. Pretty much Pop, you got out around like 935. And then Facebook, I pretty much got in around like 215 and then sold around like 222. So, yeah.
Most people, when they start trading options or they start investing, they start just picking a bunch of different random stocks.
Yeah.
What would your advice be to those people?
So I pretty much trade the same stocks over and over again. And I trade top stocks. So I don't really trade any riffraff. So I pretty much trade, top stocks, mega caps, and I pretty much trade a little bit of the larger cap stocks as well, and sometimes mid cap. So I don't trade. I've never actually even traded penny stocks. I typically only trade, those mega cap stocks that are top in the indices because they typically follow the indices. So I like to trade things that are within sectors. So like, for example, if I'm trading NVIDIA, AMD, I know I can pretty much trade Qualcomm and MU because they pretty much move all the same way. So that's kind of how I pretty much trade. I pretty much trade in sectors and I pretty much trade the same companies over and over again. So I have my starting 5, pretty much have my reserve 5, and I have an extra 5 that I go to from time to time. And I trade the companies that I'm long-term invested in anyway too. So that too. So yeah.
Yeah. What would you consider riffraff?
I would consider riffraff like DraftKings, Lucid, Neo. That's riffraff to me. Those loss-making businesses are riffraff. So yeah.
Loss-making businesses. I think it's important because when a company is not tied to the fundamentals when the stock's not tied to the fundamentals of a company, because it's trading at such a high valuation, it's very difficult to predict because it's like there's nothing to base that valuation in. It's just like moving erratically as hype comes in and hype goes out and all that stuff plays into it. That's interesting. I don't know if I have any other questions.
For sure.
So hold on really quick. This picture that you took, what year was that in?
This picture right here, I want to say this was like April 2019.
Okay.
I want to say this was like April 2019.
Before I get to the wrap, I got a few wrap-up questions and then we'll head out. But I'm really curious, what books are you reading?
Yeah, so I spent a lot of time reading Charting and Technical Analysis by Fred McAllen, Trading the Trends, Trading in the Zone. Those are where a lot of the books that I really read when it came to trading and investing. I also, to be honest, I really spent a lot of time with really just meditating, really working out too. To be honest, I've never really been that book crazy person. I've been more so execution, really based. And so that's really primarily what I've been doing. So yeah.
Execution makes you sharper.
Yeah.
Reading is great, but execution will sharpen you up.
Yep.
What kind of software are you using in terms of like your either trading platforms or research?
Yeah. So when I first started, I was really hip to Seeking Alpha. Obviously, it was big it was getting big at the time. Now they charge, you know what I'm saying? Seeking Alpha used to be completely free. So I spent a lot of time on Investopedia, Seeking Alpha, just reading there. I spent a lot of time divvying into the Morningstar analysis on companies as well too. I'll take a look at the company websites, a lot of times digging into my research and analysis, taking a look at financial statements as well too. So that's a lot of where I spend my time. And then I'm really chart based when it comes to trades. So the platforms, that I use, TradingView, I trade on TradeStation and TD Ameritrade, have my long-term Fidelity, Charles Schwab. So that's kind of just a little bit about, my particular, platforms and just, different things that I use.
What's one thing about trading or investing that you did not expect?
I probably say one thing. I mean, I don't feel like I really experienced anything that I wouldn't have expect. Like it comes with losses. I knew that. It's going to take time and dedication to really understand and consistency. So I won't really say that there was anything that I kind of didn't expect. I already anticipated that it's something. It's nothing in life, comes easy. So that's kind of the way I looked at it. Yeah.
What's a tool that's indispensable to you as an investor?
You said a tool that's indispensable. So something that I can't go without pretty much.
Right. Yeah.
I'd probably say as an investor, charts, indispensable. Charts, need charts. Even if I know the company's fundamentals, like you could tell me a company is good fundamentally all day long, but I need to see what that chart looks like too.
Before we go out, my last question for you is, what does wealth mean to you?
I feel like wealth means owning your time. That's what wealth means to me. Owning your time. So I don't think wealth really is defined necessarily by a number, but I think wealth is defined by owning your time, and having abundance of time, because I feel like time is the most valuable asset in this, and it is, there's only one thing that doesn't come back, and that's time. Water comes back around, money can come back around, everything can come back around, but time never comes back around. Once it's gone, it's gone. So,
man, I could ask you questions all day because you understand this stuff at a deep level. So I appreciate you coming on the show, man. Where can people find you? Where can they follow you? Where can they support you have going on?
For sure. Yeah. So you can follow me at mrlawrence.e. So mrlawrence.e. You can follow me there. That's my only Instagram page besides the Panthers News Network. That's my second Instagram page. Any other page, I will never reach out to you asking you for money, crypto, none of that. So be very careful about people that may try to duplicate my page. Obviously, that's something that Instagram continues to have to work on. So yeah, that would be where you can find me. So yeah.
Yeah, they got to fix that. That thing is crazy. And
Yep.
You know what? I think it's just a ploy to get us to pay for the verification.
Yeah.
Have you gotten that? I've gotten DMs from people who are just like, hey, I can get you verified. Just pay me 10 grand.
And they're scammers too. Those people are scammers. Yeah. So it's like, yeah, it's, I've never been a person that needs to, feel like, oh man, I got to have this, but I definitely do want the blue check because I don't want people getting scammed. So yeah.
Right.
Yeah.
Dope. I appreciate you coming on the show.
For sure.
It's another episode of the Millionaire Talk Show. And you guys definitely got a very value-packed episode. I saw a lot of people in the chat shouting out BWSO. I saw a lot of people in the chat just watching live. So I appreciate you guys all for tuning in. We're going to continue to bring you this heat, specifically this episode. Make sure you click the link in the show notes for all of our products and services. Make sure that you guys click a follow for this brother. We'll have his information in the show notes, and make sure you guys also continue to follow and support what we have going on. We got a Patreon. We got some other stuff going on and concerning adding more value to the podcast listeners. So that should be launching soon because we want to add more value to you, and we want to make sure that you guys are actually taking advantage of the information we're bringing to you, not just hearing it only. My name is Charles Oglesby, also known as Todd Millionaire, and we are out.
Sure.
Great show, man.